Alright, so today for day 4, I wanted to talk about liquidity sweeps. This will be the first confluence that I talk to you guys about. It is probably the easiest to see and to read in the market. I've just kind of seen that from talking to like my friends trying to teach other people. Um, but yeah, so first I want to go over what even like a liquidity sweep is. Like it sounds so like confusing. Liquidity, such a big word. Sweep. What is it sweeping? What does that mean? All that kind of stuff. So a liquidity sweep is where a high takes out a low, or where a low takes out a high. So I can go into this market right here. Here, I'll keep that there. I'm on QQQ right now, so I'll keep that there. I'll show you. Let's go to the higher time frame just to get more examples. So, boom, literally in the market right now, there has been a liquidity sweep. So, you see this low that was created in New York PM session got taken out. This is a low. Okay, I'll show you the high first. This is a high right here from New York AM. Asia session opened, then London session opened and swept out the highs. You see this where it passed the line? So look, this is the high right here. Came down, did its thing, and then boom, swept this out right there. Came here. This even is a sweep, but it just swept out, any resting orders that people had still right here. But then it pushes price in the opposite direction. So right now, there's even a liquidity sweep. There's a low right here that was created before, and then we just came down, swept out this low, and we're getting buyer pressure to the upside. So this honestly is like a pure liquidity sweep. Like you see this and it's like, oh my goodness, that's so nice. And not only did this sweep out this low, but it swept out this low and it swept out this low. So let's talk about why liquidity sweeps happen. Liquidity sweeps happen because there are, where is my, I was on QQQ, am I wrong? Okay, I was actually on GBP. But okay, so let's talk about why these happen. These happen because they're on those highs and lows. There are resting orders or resting stop losses. So people enter the trade and put their stop loss at those highs. That's usually how it goes within the market. And the reason why you see highs and lows getting taken out is so that they can hit those stop losses and fill those orders to continue in the opposite direction. So, for an example, if I, let's see. If I entered right here, say I was like, oh, okay, my setup happened. I want to enter down here. Oh, that's the long position. I want to enter down here to go short. I'm going to put my stop loss right there, and I'm going to target, right there. So this, say I want it at this high because it swept out this high right here. Say I want my stop loss to be there. This moves down, and I'm like, oh my god, this is probably where I'm so excited. But then it moves up and takes out my stop loss. This is how it goes for a lot of people. They have their stop losses at these highs or at these lows, and they ended up getting swept out because they didn't wait for more confirmation or they just took the wrong trade. And it's happened to me before, and then it continued in the direction I wanted it to go. But yeah, so that's basically it for stop losses. For like resting orders, it means like if you have a limit or sell order or limit or stop order. So I can show you guys what that is. A limit order is like you want the price to hit this certain level, and then it'll enter you in the trade. So let's see, okay, right here, buy. So if I do a limit order, take profit stop loss, I can put my limit to there or right here, and then once it hits that level, it'll put me into this position, and then I'll be in this long trade right here. And then for a stop, they're similar. For a stop, you have to put it below, or you have to put it, if you're buying, you have to put your stop above the actual price, or if you're selling, you have to put it below the actual price. So right now I have to put it like right there. So I'll put it like 1 point above. Enter that. So once it hits that level, it'll put me in long, and then yeah, it'll go up if my trade's good or not. But so that's a buy stop. That's um, sell stops are the same. You just have to put it below the actual price of where it's at now. But for limits, you can just put it anywhere. So any level you want it to hit at, it'll enter you in the trade. So you can put it above or you can put it below. And this is what the banks want to get. They want to sweep out this so that it'll enter me in the trade, and then they can either send it to my stop loss or it'll go up to my take profit. But yeah, so that's resting orders, what that means, because I remember I was super confused about resting orders and what that even meant. But I hope the stop buys and the buy limits, and sell limits and sell stops, kind of explain it better. So looks like it hasn't even. I don't know why it hasn't entered my trade. I mean, it hit that, right? Am I wrong? I don't know. I honestly don't. I'm on the 30 minute. That's probably why. Huh. I have no clue. Okay, yeah, I'm in the trade now. So that's what it does. You have it at a certain point, takes out that, and then boom, it starts going down to wherever you think it was gonna go, or wherever your stop loss is, could go there. But yeah, so stop losses, if you have it at a certain point, um, the banks like to push it down to this point, take out all the stop losses that are at this level, and then they like to send it up the opposite direction. And I'll show you more examples of that. So where was I at? I was on this, honestly. I think I was on this. Or was I on this? Yeah. Oh no, this is from my last video. Okay, this is where I was then. Okay, so yeah, liquidity is where there are either stop losses sitting or there are resting stop/limit orders waiting to get filled. So that's hopefully that was a good explanation. I remember that was confusing for me when learning liquidity sweeps, because in general they weren't hard to find, but you never really knew the context behind why liquidity sweeps were happening and what stop limit orders, whatever. Um, they're confusing, but I hope that explained it a little bit better. Um, Number 5, don't be liquidity. So this is obviously easy for me to say. It's harder to actually do. So right now I'm honestly becoming liquidity. I put my stop loss at this low, but price wants to actually sweep out the low before it goes up. So I'm in a long position. I'll just put it to there. But before it goes up to this point, it wants to sweep out all these lows before it goes up to there. So if you enter breaking your rules or anything like that, that's usually when you become liquidity, because you didn't wait for extra confirmation, or you just didn't wait for confirmation at all to enter. So right now I could easily get stopped out right now to get sweeped out, and then it just pushes right back up to where I actually wanted it to go. Do not be liquidity. Focus good on your risk management and when and where you enter your trades and where you put your stop loss and take profit. I'll go over all of that in the future, but if you're watching anything else right now, that like TJR, he explains it really well, and all that kind of stuff. So yeah, just don't be liquidity. It sucks. It makes you feel like shit. It makes you feel like the market's targeting you. It's not. You just entered wrong, or you didn't wait for more confirmation. Um, but yeah, so I showed you liquidity sweeps, but I want to show you a few more just to kind of get it in your head. Let's see. Okay, boom. Liquidity sweep right here. It's a clear one. So price made a low right here, swept out all these lows. Literally all of these lows. Swept out boom, 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 boom. All these lows. Swept out all these lows. Yeah, actually, it didn't sweep out all those lows. Not all the way. Not all the way down here. It swept out all the lows from this point and above. So from this low, swept out this low, and all these lows up here. Um, but then it pushed price back up to all these highs, sweeping out these highs, which it passes this high by a tiny bit, not a lot. Sometimes it can be more than other times, but usually it's like a wick or a tiny candle close. But right here, perfect wick. Like it wicked out these highs and then boom, just dumped, bro, dumped. But then you see it dumped so that it can take out all of this liquidity right here. All of these resting orders and stop losses, all of this, all of this, all of this, all of this, all of that, even this, even this, even this, and even this. It took out all these lows, and then what did it do? It reversed to the upside, and that is literally all liquidity sweeps are. They take out the resting orders or stop losses that people have set at these lows so that they can, boom, push price in the other direction. And it's so evident in the market. Obviously, you look at me and you're like, oh my, how does he see it? How does he see it so well? All this kind of stuff, which I used to do the same thing when I would watch TJR. But once you learn it, it's like this is the easiest confluence, and that's why I'm making it first. You literally will see it all. It took out all of these lows, and I showed you with the parallel channel or whatever that is, the path. I showed you that it took out literally this low, 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 all of these lows that weren't taken out before. And then what did it do? Boom, bull ran to the freaking moon. But that's what I'm saying. Like it's so evident that it happens. Like I'll show you another example. Let's see here. Boom, right here. Right here, right here, right here. This is it. So you see all these lows. Oh my gosh, so much liquidity right here. So many orders, I guess right here. So many orders just sitting there. Takes out those orders. Not only that, but it takes out these orders too. And then not only that, it took out these orders that hadn't been taken out yet. And what does that do? Pushes the market up. Look at that. Total bull run to the upside. Crazy, crazy buyer pressure after this tiny little sweep. It took out all these orders. Say people were in a short. If it hits this level, I'm going short. My stop loss up here. Oh my gosh, you're cooked. That's becoming liquidity. You do not want to do that. Say these people were in a freaking short. They were like, okay, I'm gonna put my entry at this level, and once it hits it, I'm gonna enter short, and I'm gonna just go down to wherever level. Oh my gosh, you're getting cooked infinitely, and you're gonna be so mad and be like, oh, the market's targeting me. No, it's not. It's targeting the people that are dumb like you because you're setting your limit or stop orders at a liquidity sweep. Obviously, it's gonna sweep that. Look at that. Oh my goodness, sweeped it out. Even though it closed past it, it still sweeped it, wicked out right here into this. Looks like a fair value gap somewhere in the higher time frame, and then it just freaking runs to the freaking moon. That is literally liquidity sweeps in a nutshell, and you see them all over the place. They happen literally everywhere. Right here, it's a tiny one. This low was created, went up, swept out this high, tiny one, swept out this high, then went down, swept out this low, and then what did it do? Ran to Venus and Mars up in space. It's so clear. It's so evident. There's all these lows. Look at this. All these lows. Boom. Low. Low. And then there's even more lows. This is a low. Look at this. Comes down, sweeps out all these lows. Passes all these lows down here. Like this low. Here, let me remove all my drawings. This low. This low. And then there was another one I thought. What is it doing? And this low. But yeah, that it took out these very prominent lows too. These lows pushed the market up. So this swept these, pushed the market up to the highs, swept out the highs, consolidated, dropped a little bit, and then this swept out little oh, my stop loss got hit. Swept out a little tiny bit of resting orders, and then oh my gosh, it bull ran. But that makes this a super prominent low. super prominent low, because this, first of all, hadn't gotten taken out in like a whole session. So this pushed up, and then it even kept pushing, like it was just consolidated. But which consolidated means it's just moving sideways. That's a big word. It's really easy to learn though. It's not super confusing. But yeah, all these lows swept out this, boom, bull run straight up. But then above here, look, there's a high right here that's created. Look at this. It sweeps out these lows that I was just talking about, swept out all of them, past them. You see this. You see this past these lows. That is a liquidity sweep. And it runs up. And guess where it ran to? Oh my goodness. Why is this like not clicking? Guess where it ran to? It ran to take out this prominent high from a whole week before this. So look, boom, boom, sweep these lows. Bull runs up, sweeps out the highs. Then what does it do? Sweeps out the highs from a whole week ago. What does it do? Oh my gosh, it freaking runs. Freaking just goes down, takes out every single order in the whole planet that's created in the world and created in the planet. What does that even freaking mean? I don't freaking know. But yeah, look at that. All these lows literally came down, swept any orders down here, swept any orders down here. It doesn't have to be a low taking out a high, but it 90% of the time is a low taking out a high. But it could also just be hitting a fair value gap, which I haven't talked about yet because it's a little bit of a harder confluence. But I'll draw one out right here. Small little fair value gap right here. Little fair value gap, and guess what it did? It swept out this fair value gap, and then it pushed up higher. Obviously not like crazy, but it still did. So it doesn't have to be low. I'll go over that later on. That's more called of a retrace or a retest, but it can still be called a liquidity sweep. So yeah, I hope that helps you. Hope that shows you the confluence. I mean, it's pretty evident. I'm trying to show you as best as I can, because this is one of the most simplest confluences. The market creates a low, pushes it the opposite direction, and then it comes down. What does it do? Sweeps out this low and this low too. Market creates lows, they want to get taken out eventually. So it takes out these lows, and then guess what it does? Pushes up, sweeps out the highs that were created, and then it goes down. The market moves in structure, and this is what every trader has taught me. You see all these big moves up, and then you almost always see a dump right after. So boom, look at this, boom, 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 takes out the highs. All of these highs over here that just were resting, all these highs take out, boom, gone, gonzo, fushunzo, dunzo, fushunzo. If you're not feeling good, we're dunzo. But takes out all those highs, and guess what it does? It freaking dumps, and this dumps even more to take out what I'm guessing is this low down here. Oh yeah, what is this? A low. And what did this do? It did not take it out because that's not far enough. But what is this? Prominent low that created a huge bull run. What did it take out? Boom, swept out that low. What did it do? Holy dump truck. Not dump, but freaking just runs to the freaking upside like, I don't even know. Freaking ostrich on a mountain. I don't know. But literally just sends it to the upside, and it sweeps here, sends it to the downside. It's so obvious, and I hope that you go through and you do this exact thing. You just zoom out the market, you look at the way the market's moving, and you see highs taking out low, or you see lows taking out, or you see the market taking out highs, and you see the market taking out lows. So I hope that's a good thought. I hope that's a good teaching. I'm trying to explain it as best as I can, as if like you guys were like stupid and like didn't know how to do anything. I'm trying to explain it to you in that way, just to make it as easy as possible, because I know that it was a little bit confusing for me. But it literally, the highs are created, the lows are created, it's super obvious, and then they get taken out. And then what happens after they get taken out? It goes to the opposite direction that it was just going in. And it 99% of the time is going to do that. Uh, if you think if you think it's going to do that and it doesn't, then you're just in a market structure change, or it's just completely bullish or bearish. But yeah, I hope that helps. And leave any comments down below if you have any questions, because I know explaining things is easy, but uh, it's harder to understand it and harder to actually apply it to the market. So, I'll answer you probably ASAP. I try to do this to help you people out, because I know that it's hard to start things and it's hard to really learn. And you think, oh my gosh, it's so impossible, it's so hard. Oh my god, I don't know what a liquidity sweep is. I don't know what a fair value gap is. I don't know what a strategy could be. I don't know what to do. It's just, it's so like apparent. Like, it's so easy to learn, and it's genuinely like, you think it's so hard until you actually do it, and then you're like, oh my gosh, this is actually easy. I just need experience to actually read price action, and then boom, you'll be good. But yeah, send a comment if you have any questions. Make sure to like and subscribe. I'm trying to just grind this out for, honestly, I want to teach you guys. It's also just for the sake of myself to, have something to do to be more productive, and have something to do to build my portfolio in terms of uh, my follow count, my like count, and my view count, and how many people know me online and all that kind of stuff. So I hope you guys learned something from this, and yeah, good vid. I hope you all have a good night or a good day whenever you're listening to this. But yeah, peace.